Hello, everyone. Thank you for your time meeting us online today. As you might have already seen from our announcement in January, that we are pleased to let you know that we had a fantastic year. In the last year, we grew 51%, and we have beaten the market expectations. In today's presentation, we are going to talk about our company, our full year results for 2022. We will also share with you our future growth plans. Just to give you a brief introduction for our company, we are a technology-enabled labor supply company operating in the infrastructure sector. So our board, sorry, Nick, thank you. This slide is about our board. I'm Bruce Korkmaz, I'm the CEO for Hercules, and today I'm joined by our CFO, Paul Whitcroft.
Hello, everybody.
As you can see from this slide, we have got a very strong board and very well respected board with both exec and non-exec directors with great blend of experience in infrastructure, financials, banking, sales, PLC, governance, and even starting and running an AIM-listed company. Together, we believe that we can grow Hercules even further. Next slide, please, Nick. This slide is about us and how we operate as a business. As you can see at the top of this slide, some of our blue chip clients we work for. As I mentioned before, we are mainly a labor supply company working in the infrastructure industry for our blue chip clients and complemented by our construction services division. Our labor supply department is a significant part of our business, which currently contributes around 75% of our turnover, and this number is still growing. And under the construction services division, we have our suction excavator services, and we also carry out civil projects under the same umbrella. As you can see from this slide, we are offering few different services for the infrastructure industry. So the biggest USP we have got is that we can supply all of these services by cross-selling opportunities for our clients under the same umbrella. We also developed our apps in-house. One of them is our Hercules recruitment app. This helps us to find local labor for local projects, and our One Team app helps us to onboard them efficiently in a paperless process. These two apps that we developed are really working for us to locate a local labor, and we are onboarding them very efficiently so they can start working with us next day. You can see at the bottom right of this slide, we have developed our See Everything portal, which stands for Skills, Education and Employment Portal. We have developed this product for our client, Balfour Beatty Vinci joint venture, working at the HS2 Old Oak Common Station. We managed to license our C portal to our client, so we started monetizing our digital product. As you can see from these products that we developed in-house, our digital arm differentiates us from our competitors, and it underpins the whole business. Next slide, please, Nick. This slide is about our timeline. As you can see here, we've got a very strong history of growth. I set up Hercules in 2008 from a family spare bedroom. It was 15 years ago yesterday, actually. Since then, we have been growing every year. You can also see from this slide that there are several milestones that we have achieved over the last 15 years. Just to mention some of the significant milestones: winning the HS2 labor supply framework in 2021, for the northern section with Balfour Beatty and Vinci joint venture. We are one of the 6 labor suppliers there, providing labor for this mega project, and we are really performing well there. Even though there are 6 labor suppliers on the framework, we are one of them. We are supplying 25% of the whole workforce. You can see that our apps, our digital arm, are really working for us. So we are finding local people, and we are onboarding them faster than our competitors. At the beginning of February 2022, we listed Hercules on the AIM market, and this is a major milestone for us, and we are very excited to be on the AIM market, and we believe that this platform will enable us to grow as we have ambitious plans for the next part of our journey. You can see on the timeline, August last year, we selected a site for our training academy, which is in Nuneaton. This site is very close to the northern section of the HS2, which will help us to upskill and cross-skill our workforce. And we believe that we can also monetize this opportunity as well. As you might be aware that there is a massive skill shortage in the UK, and we believe that upskilling and cross-skilling our workforce will help us to close this gap, and also it will help us to monetize this initiative. Our sustainable approach is to find local people for local projects, train them up, put them to work, and retrain them for upskilling opportunities. And lastly, we have started our 2 new divisions in November. They are our construction white collar and our construction site security divisions. These 2 divisions already started very well, and they already started bringing some income for our business. Paul, next slide is yours.
Thanks, Brusk. Yeah, so as Brusk has just been saying, we joined AIM just over a year ago now. It seems like a lot longer. We were very pleased to get that done. In fact, we were one of a few relatively small handful of IPOs that actually were completed in 2022. Of course, as we finished 2022, our financial year, with showing a above 50% increase. The second year in a row that we've achieved more than 50% increase in the turnover. Slightly disappointing, we didn't quite make it to 50 million, but almost 49.5. And the really encouraging thing so far this year is that we're 6 months into the next financial year, and we expect, we think and believe that there's a good chance that we will have a similarly successful year in terms of growth. And if that is achieved 3 years on the trot, more than 50%, then it'll be a pretty staggering 3 years, I can say. So we've had a record activity year, and we're hoping to have another record activity year. The really good thing about this is that this strong growth that we've just been talking about is spread across all the 3 divisions of the business, not just labour supply, but civil projects and suction excavator services as well. Labour supply obviously is benefiting from the HS2 northern section contract, which is still by no means reached its peak. That peak's still some way off. But there's lots of other labour supply contracts that we're now involved in, and more to come as part of the government's investment. Civil projects is the one area of the business that we could do an awful lot more than we do, but we control it because we're looking for jobs that we know that we can do well. We know we can get pretty good margins of low risk. That has increased similarly in terms of the percentages, as you can see here, from 8 million to 12.5 million in 21. And we think that will still increase in 2022, but by a relatively small amount. So in 2023, I should say, but from a relatively small amount. Our suction excavator services obviously utilises our vehicle fleet. We've just taken delivery of the last 10 that we intended to buy, and we got them just in time to get the super deduction before it expired. We now have a fleet of 30 vehicles as of the end of March, and we think it's one of the largest fleets in the UK. That 3.6 million turnover was achieved in 2022 with actually less than 20. I think it was probably about 16 or 17 average over the years, something like that. So we're looking for an increased result in 2023 from them. I think Brusk mentioned the digital products. We've just got some initial funding for that, which is nice to see. It's a new income stream, and we think we can do more with it, and I'm sure we will. Maybe relatively small beer at the moment, but it will grow. We're a business that set out our policy at the IPO very clearly. We had a good story to tell. We know we did, and we wanted to make sure that we were going to offer dividends to our shareholders, and we've now paid them for 2 years. That's the first 2 years since we IPO'd. The last one was only a few weeks ago, and we're very keen to continue with that. And I think finally, again, just an indicator of what the way we've set our stall out. We said at the IPO we wanted to look for a training academy, and as Buster just said, it took us some months, but we found the site, we got the lease signed, and we're working on that now and hope to get that available to us as soon as possible, certainly by early next year. And that will provide yet another new income stream, as well as allowing us to train and retrain some of our own employees rather than pay externally. And of course, it will help the gap, the skills gap in the UK market. Next slide, please, Nick. This is our group statement, guys, and it shows you the growth from 2022 over 2021. You can see the revenue there, the 51% increase. So that and the adjusted EBITDA, we told the market what we would do, and in both of those numbers, we just slightly exceeded what we told the market. So we're very keen to make sure what we say is what we do. And that's the way we started after the IPO. It's very, very interesting that before the IPO, which as Bruce said is more than a year ago now, we actually had about 400 guys on sites. I had a look at where we actually are as of last week, and I think we're up to 865 now, which is an incredible increase. And this is indicative of the growth, the year-on-year growth that we've been talking about. This, of course, is not just magically happened. We've had to work very, very hard as a company to get our management structures, our procedures, and our processes and our systems up to a level that could deliver not just the growth that we've achieved to date, but also the next few years, because we knew prior to COVID coming along that this growth was going to appear, and we knew if we could get our act together, we could succeed very, very well out of it. And I think you can see already that we are doing so. That's why you can see our overheads have increased. That's been planned. It was outlined at the IPO, planned growth in overheads to cover not just the growth in the suction excavator services business, but the growth in the labour supply part of the business, particularly HS2, which needs its own type of management infrastructure to deliver such huge numbers. So all in all, very pleased with our 22 results. And the IPO year, of course, was completed in the 2022 year. So as you can see, the exceptional items in both across those 2 years, that's the IPO costs primarily, and our PBT would have been 0.8 million if it wasn't for the IPT costs. The IPO costs. So we're very pleased with that and looking forward to another successful year ahead. Nick, next slide, please. This is our balance sheet, again showing the changes from 2021 to 2022. So ours is a relatively simple balance sheet. Our fixed assets are the suction excavators, which are quite expensive. They cost around £500,000 each. And as I said, we've got 30 of them now. And at that point, we didn't quite have 30, but we were well on the way towards that. Our current assets are debtors and accrued income. The accrued income really is a large part of that is from the civil projects. And of course, that's increased year on year because our turnover has increased so dramatically, and our levels of activity have. In terms of liabilities, they make up the asset finance for those suction excavators mainly, but also we capitalise leases, which we've got leases for our main office block and a couple of other sites as well. And as you know, under IFRS, you have to capitalize them. So you've got an asset entry for the leases and you've got a liability entry for the leases too. The other liability is we have an ID or invoice discount in facility, which anybody who is familiar with the sort of business we do will know that you can't run a business like ours without that sort of working capital, because we pay our operatives weekly and bill our clients monthly, and they're typically probably on a 60-day, 45, 60-day terms. So that's the balance sheet, and that's why it's broadly increased in the way that it has. Quite a solid balance sheet. Nick, next slide, please.
Thank you, Nick. Thank you, Paul. Strategically, we are very well placed to benefit from UK government's continued investment in the infrastructure sector. If you can look at the first bullet point, it says 2021 National Infrastructure and Construction Pipeline sets out nearly £650 billion public and private investment over the next 10 years, of which 200 billion is to be invested by 2024-2025, supporting average 425,000 jobs yearly. Second bullet point states that estimated 217,000 new skilled labor required in the UK construction industry by 2025. There is also huge investment being made in Hercules' core markets in the next 5 years, £22 billion for HS2, £17.5 billion for the railway, £27 billion for strategic roads, and £525 million to bring forward developments in nuclear power. As you are aware, in the last budget, government has recently classified nuclear energy as a green energy, so more investment can be made. So we are self-sufficient with energy production in the UK. And finally, last bullet point states that labor supply is high on the industry's agenda. Demand is close to 20 years high, compounded by demographic change and Britain's exit from European Union. Companies like us are expected to employ a local workforce. So as you can see from these 4 bullet points, there's a huge investment being made in the infrastructure sector, and our clients require people to build these projects. Also, there's a skill shortage in the UK. So this is where Hercules comes into the equation to help our clients to deliver these mega projects by our sustainable approach, which is finding local people for local projects by using our apps, then training them up by using our training academy, then putting them to work as this is what we do and we are good at it, and retrain them for upskilling opportunities. We believe that this sort of approach is so important for the industry and also for our country. Lastly, we believe that our competition is very traditional with privately owned companies, and they do not offer the different services like we do. So our clients use different services, prefer to use different services from us as a one-stop shop. We also believe that our innovative and digital approach is noticed by our blue chip clients, and they continue to give us more work. Next slide, please. Thank you, Nick. As you can see from this slide, we have multiple growth opportunities in the infrastructure sector. First one is the organic growth, as this year started really well for us, over 3 divisions. All the 3 divisions have been really busy, and we've got a very strong pipeline of projects into 2023. With regards to our training and training academy, we want to monetize these opportunities. And the third bullet point, as I had mentioned before, we have started our white collar and site security divisions, which is exciting, last November. And so they already started bringing some income, and we want to grow them for the next few years. With regards to our digital arm and our digital product with C Portal, our aim is to push the other blue chip clients, and our aim is to push this to other projects as well. We received, as Paul said, extra 10 suction excavators over the last month in March. So we've got now 30 suction excavators. We've got one of the biggest fleet in the UK. And our aim is to maintain our 80-85% utilization rate. Also, as Paul said, extra 10 suction excavators will bring income towards this year's results. With regards to the subsidiaries and partnership approach, we believe that this sort of approach will help us to accelerate our labor supply growth into new geographies and into new sectors, partnering with ambitious managers. You might have already heard a company called Mighty PLC. They started this partnership, and this enabled them to grow really fast. So we believe that this sort of approach is very suitable for our labor supply division. Lastly, we are talking to a few labor supply companies, and obviously I can't give very much information about this, but we believe that next few months will be very exciting for us with regards to the acquisition opportunities. Next slide, please.
So why invest in Hercules? What's the investment case? Well, to summarize, we've got a sustained track record of revenue growth. In fact, 15 years since Bruce started the business, as he said, anniversary only yesterday. Positive performance across all divisions, all growing really well. A strong momentum that's continued into 2023, and we know we'll go further. The ability to cross-sell our capabilities significantly to our clients. We've got a huge market opportunity because of all the infrastructure spending, and because of the contacts we have with all those clients that you see down there on the slide on the right-hand side. We're in all the frameworks. We've got strategic partnerships with these people. We've worked with them for years, so we're very well placed to gain market share. We have a defined strategy with multiple growth opportunities. You've just seen that on the previous slide. And finally, as we set out at the IPO, we have a progressive dividend policy, and we are going to follow that. We've paid 2 lots of dividends, and we intend to continue to do so.